Hi there, welcome to Markets Tomorrow right here on 89, the Mumbai News Centre. I'm Tanveer Gill, and it was quite an anti-climax for the markets. The story is on your screens. We were talking 9,000 at the start of the session. In fact, 9,000 plus really, given the global cues that we were handed with. But then the markets lost ground, in fact lost a good 100 points from the high point of the session and closed down 0.5% from yesterday's point of wrapping up trade. For the broader markets, more pain, about 1.5%, more than that rather, was the kind of cut that the mid-cap and the small-cap indices witnessed. That got reflected in the market breadth and that got reflected in a lot of liquid names that came off. We'll start with a quick summary of the day's action. Market surged to a fresh 52-week high, only to reverse the trend by the end of the session. Profit taking in oil and pharma companies dragged the Nifty below 8,900. Tata Motors gained after its British subsidiary JLR clocked best ever sales growth in the United States. Global brokerage firm Bank of America Merrill Lynch raised the target for the stock to 580. DLF tanked on profit booking after the management said that they hope to close the deal with GIC for the rental arm stake sale in the next 2 to 3 months. DLF told ET Now both parties have agreed on the base value. Final terms will be closed out soon. Walk hard cracked as the US unit got an FDA warning letter. The health regulator will withhold new approvals until compliance issues are resolved. Jubilant FoodWorks soared after global brokerage firm Goldman Sachs upgraded the stock to buy on the belief that key positive changes, including greater focus on same-store sales growth, are yet to be factored into the stock valuation. Those are the top headlines. We'll make sense of the markets as we always do with voices lined up on the show. Chris Wood of CLSA talks about his market philosophy and his approach towards India among EMs. Sameet Chavan will take us through his strategies to approach trade tomorrow, and Sanjeev Hussain will highlight the fundamental stories in the market today. The question of the day is the market seeing nervousness near 9,000? Is the Nifty being nervous near 9,000? And I know that rhymes a bit because all of those words start with an N. Good evening, Sameet. Good evening, Sanjeev. What is your own sense? I'll start off with you, Sanjeev, first. What's causing the nervousness around 9K?
Yeah, hi. Well, Tanveer, we've had a non-stop rally from 7,900 to 9,000, and you know the proverbial profit booking has been regular, but you've hardly seen any major correction. So I think today was a good pivot point. The Dow had rallied. There was all global cues, and the lo and behold, I think there was some huge profit booking in the mid-cap. Stocks by I think local operators and some of the mutual funds. So it's time for some mutual funds to actually take home the profit, and rightly so. There has been an unprecedented run, and foreigners who have been late to join in now are the force behind some of the large caps. But I think the broader market which was under pressure. So I would expect another few days of such a profit booking bout, but definitely we are headed to new highs before the UP election results by 10th, 11th, and we'll take it from there. However, as a caveat, Tanveer, market has become a little frothy. It is looking overbought. So such bouts of correction will be healthy for the market, and they will weed out the boys from the men.
Sameet, your sense on the charts?
Yeah, hi Tanveer. We have already seen a relentless rally of nearly 1,100 points in last couple of months, and that this particular rally has come with no major correction. Any minor dip during this entire rally has clearly bought into. So overall, if we look at the weekly chart, the trend has been quite strong, and we still believe that the market has room to move towards its all-time high quite soon. So we would maintain our positive stance, and as far as the levels for next 2 to 3 days are concerned, we would still maintain our positive stance, and we would expect the Nifty to find support around 8,800, 8,700, which has become a very strong base. So until and unless Nifty remains above 8,700 on a closing basis, directionally the structure remains bullish, and we are heading towards new all-time highs quite soon. So any dip toward this mentioned range of lower end of around to 8800, 8750, 8700 would be a very good buying opportunity. So traders are advised not to get carried away by this pessimism. We've already seen a good rally, so we would expect some consolidation to continue, and within this consolidation we would have such kind of bout of selling. So we would expect Nifty to move towards all-time high quite soon, so use any dip as a very good buying opportunity.
Okay, well, let's talk about the big stories in the day. DLF, finally the deal got done. They've confirmed the stake sale in the rental arm to GIC. Vivek joins us with details of the same. The stock lost 8% at 141. But we should bring up a period chart, a chart extended out on the timeline, which reflects how much the stock gained in anticipation of this news. CLSA, of course, maintains its sell with a target of 115 there. But not a 1 month chart, really a 6 month chart or a 52-week chart to reflect the trend on DLF, because there has been a lot of interest in anticipation of this piece of news. So from December onwards, which will get reflected in a 3 month period, and let's bring up that 3 month chart for our viewers. That one would reflect how much the market was building into this event. Nearly 30% higher for DLF. I think we should also pull up the 52-week chart just to get the context of the move on the stock. 32%, but that's because it tested 168, then came off substantially through November, December, then picked up momentum again. Vivek, take us through the story first.
Well, absolutely. Well, of course, talking about DLF, the game changer deal, as you rightly mentioned. Now, if you're looking at it, what has actually happened is that they've entered into the exclusivity talks with GIC. Most probably, the deal with GIC will go through, although they've not specifically mentioned the valuations. Earlier in the past, they have spoken about valuations somewhere in the range of 12,000 to 14,000 crore for a 40% stake sale in their rental arm. Now, this would actually go ahead and value the entire rental arm somewhere in the range of 30 to 35,000 crore rupees. Now, what will actually happen is that the promoters will then issue this particular amount after post-tax, which is somewhere come in the range of 7,000 to 8,000 crore rupees back into the business, and this will actually take the promoter shareholding above 75%. So to actually offset that, since SEBI doesn't allow you to have more than a 75% shareholding in your own company, the promoters will then have to go for a QIP issue. Most likely it will be a QIP issue. They have not specifically mentioned what it will be, but most likely, according to market sources as well as the most logical step, it will be a QIP issue that the promoters have to go for. This will actually go ahead and cause a further erosion as far as the capital returns are concerned. So now if you're looking at it, there is going to be equity dilution, and most of the analysts on the street were quite worried about the fact that return ratios will be depressed. Talking about today's performance, DLF of course was the top laggard in the Nifty realty space, down almost 8%. At one point it was down almost 10%. Now if you're looking at it, of course there has been a significant run up in the stock price since demonetization and even since the budget, and most probably this was the profit booking that the market saw, and also some sort of concern emerging over the depression in the return ratios going forward.
Thanks Vivek for that. Sanjeev, time to get out of DLF, because the market is divided between whether they'll go the last mile to actually become debt free versus whether they can actually generate that kind of money to clean up their balance sheet.
Well, yes, Tanveer, you'll have to say it's a glass half full, or half empty. Reason being, the stock had already seen a very, very good run up from the recent lows, and it became a good proxy play to reducing debt. Now, once the announcement is out, I think there must have been regular profit booking. However, the intention of the company is clear. It wants to reduce its debt, improve the return on equity, and for that there will be some tinkering on the promoter shareholding. Notwithstanding that, if we think around this 125 to 135, the DLF becomes a very good proxy play to pick up in real estate activity, reduction in debt, and we know for a fact that they will be launching an REIT on that space, which will be a very, very key instrument for people to lap up once it gets listed. So I think DLF around that 125 to 135 is a good buy if you have a 1 to 1.5 year window on the real estate market, because we think second half will see a spurt in real estate prices and demand. However, in this space for us, Godrej Property and Shobha are our two top picks, and we continue to be overweight and buy on declines on both those counters.
Yeah, and Shobha has done really well actually last two sessions. I also want to touch upon the story with metals. You know, the commodity rally continues, and it's really China's war on smog which can turn out to be a blessing in disguise for Indian metals. First, let's get in the story from Mubina and then talk about the outlook thereof.
Well, the metals index as a pack was really able to stand out in trade. This, of course, was aided by the fact that the Chinese government has really clamped down on the smog problem that has, of course, engulfed the country. So what essentially China has done is it has ordered curbs on steel as well as aluminium output in 28 northern cities during the winter heating season, which is about 4 odd months. Now, the government has ordered steel producers to halve their output in 4 northern provinces, which include Hebei, Shaanxi, Shandong, Henan, as well as Beijing and Tianjin, which are, of course, some of the key hubs in terms of steel production. Now remember that China produces almost 50% of the world's steel capacity, so of course this is something that would have an impact. In fact, they have also ordered cuts in the aluminium capacity by 30%. China once again produces 60% of the world's aluminium capacity. So analysts say, assuming a 4-month halt, the measures that are of course put in place could lead to a 5% loss in aluminium and 3% loss in steel production. So that is something that is of course a big positive and would aid in easing out the glut that's there in both of these metals.
Thanks, Mubina, for that. Sanjeev, you want to come in? We've already seen a splendid rally in commodities. Is that here to stay? Are you recommending Tata Steel, Vedanta, Nalco, Hindalco to your clients?
Well, we've been long on this whole space right from February, March of last year, and they have been outperformers. And you know, repeatedly we've been saying use declines to buy, because metals is the proxy to global growth, the protectionism within Donald Trump, and you know, whether it's ferrous or non-ferrous, like you just cited the China factor. I think it's a huge boost for countries like India, particularly on the export front and on the domestic front. So you know, not to chase those prices, but Hindalco is our top pick on the back that Novelis is performing excellently, and notwithstanding that there is a QIP, I think slated for a day for the next few days, that would be a little bit of a dampener on the return on equity, but it should help you know, reduce debt. So for us it is Hindalco, Tata Steel and JSW Steel in the top you know, in the metals pack, which are our top picks, and we continue to be bullish on that. Also, like you pointed out, I think the environment issues in China will continue to play out, and some of the chemical stocks and industry in India will continue to be outperformers. Over there we'd like to take two names, that is SRF and Atul, where we are very, very overweight.
Okay, I also want to touch upon Tata Motors very quickly. Sameet, on the charts, do you see this as just covering some ground, a rebound, a lifeless rebound so to speak, or a meaningful one which can take Tata Motors higher from here? So a good entry point for viewers tuning in.
See, as far as Tata Motors is concerned, we have already seen a good corrective action from higher levels of 520, 530 in last month and a half. We have been witnessing some consolidation ever since the stock gave a nosedive from higher levels of 490 in a single day. So we would expect this consolidation to continue, since 430 seems to be a very strong support zone, you know, with a near-term, medium-term perspective. And on the higher side, we don't expect this stock to move beyond 480, 485 quite soon. So we expect some time-wise correction in this particular stock, wherein the range would be slightly wider. 485 on the higher side would act as a very strong resistance, and lower side we would expect buying emerging once the stock, you know, comes back to say 440, 435 levels.
Okay. Sanjeev, very quickly, any thoughts on the auto pack, particularly Tata Motors?
Well, Tanveer, we had a buy closer to the, you know, that 435, 440 levels. We thought a large part of the weakness both on the hedge against the pound and the weakness in numbers is played out. It still remains the best proxy play globally on the transportation sector, which has been a huge outperformer in the US. However, I think over ownership on the FI front will cap any upsides marginally, majorly. So like he said, 480, 485 could be range bound. But we advise clients at 9,000, to build a portfolio closer to 440, 450 when you get a decline, because going ahead, we think you could get a 15% return in Tata Motors. However, in the four-wheeler space, we continue to be overweight on Maruti, and we've upgraded Ashok Leyland from that 85, 87 level. We think Ashok Leyland could be a dark horse in the CV space. We have a target of 120 by the end of the year.
Okay, and that's another conviction call coming in on Ashok Leyland from Sanjeev Bhasin, 2% down, but he sees potential here. We'll take a break. As we do so, hear out the management of Cipla. Umang Vohra, MD and Global CEO, spoke about the way forward for the business to my colleague Darshan Mehta earlier on. Hear him out. When we come back, we'll discuss pharma stocks and how to approach trade tomorrow.
My view is that the operating leverage has actually panned out, because if you really look at our margins, we've guided to a guidance range and we're in that range, and actually last quarter was far better than that range. So I actually think that there is operating leverage, but I also think that for this leverage to be more in the future, we need to have more unlocking in the US pipeline. But we've launched 18 products. That's as much as anybody else has launched in the US in the past 1 year, right? So I think our capabilities to launch products, etc., are all there. The question is, how quickly will we get approvals from the FDA? We started our filings some time back, about 6 months back. So I would say it will begin to unfold. It's not going to happen in the next quarter. It will take 2 quarters to unfold, but it's coming. It's coming. And will I be overly concerned if we miss it even by a quarter? No, I won't. The inhaler business we've always maintained is going to be a very strong business for Cipla. And we will try and go after as many products we can in the US. I believe we filed quite a few. We've done, we've public about the fact we did albuterol. We're public about the fact that some of our partners have filings with us as well. And we're public about the fact that we're going to go after Advair. So it's a big franchise for us. We will build it out.
Welcome back. You're still watching Markets Tomorrow right here on ET Now. Sanjeev, the Cipla story among farmers, do you like it?
Yes, Tanveer, that has been one of our top picks in the large cap space, and like your management pointed that they are looking for some FDA approvals. But the biggest, biggest event would be the Seriflo launch in Europe and how that would play out. They've got the approval. It's just a matter of how fast they can market that and get the production in order. But their inhaler business has been their bread and butter, and we still think that on any decline, Cipla is a very good proxy play on the pharma sector in the Nifty. We have a 1-year rating of 700 plus on this stock. And like we said, it is a very good proxy play to the Seriflo launch in Europe, and that gathering further traction across the globe.
That is the case indeed. On the charts, however, I just want Sameet, you to comment on Jubilant Foodworks, because Goldman Sachs has put up an upgrade on the stock. Technically, is it supportive of that kind of sentiment?
See, the stock has been consolidating in a narrow range since last 2 weeks. It's been struggling to cross its 200-day moving average, which was placed around 1025, 1030. Today in the morning session, we witnessed a good positive traction with substantial rise in volumes in this particular stock. So we were closely tracking this particular stock, but in the latter half, we witnessed some profit booking at higher levels, and the stock has managed to close around those levels. So going forward, we would want to see the stock moving towards 1040, 1045 on a closing basis. If that happens, then we'll say that the near-term trend has changed from sideways to positive, and in that case, we could expect Jubilant Foodworks to move towards 1150, 1160. So as of now, yes, it has managed to close tad above this important resistance, but we would expect to know at least some follow-up buying to happen in this particular stock in next at least couple of days time.
Okay, your strategies very quickly, Sameet.
Both would be on long side. The first one would be on Kaveri Seeds. Day before yesterday, we witnessed a good price volume breakout from bullish pennant pattern around 474, 475. In last 2 days, we have witnessed some pullback, but this would be a good buying opportunity for a target of 529. Stop loss 468. Our second buy would be on Siemens. We have been upbeat since last 3 weeks. However, this stock has consolidated in a narrow range, but it is hovering around a strong support of 1200. So going forward, we expect Siemens to move towards 1290. Stop loss would be around 1148.
Okay. Right. Sanjeev, you have exactly 30 seconds. Gujarat Pipavav as well as Thermax are your recommendations. Sorry about that.
Yeah, so Tanveer, Gujarat Pipavav is a very good play on the container terminals and the flow of traffic with manufacturing and the entire shipping block picking up. We've seen the Baltic Freight Index rise. Globally, there is a huge upsurge as far as trading and commodities go. We think Gujarat Pipavav, it is owned 43% by APM terminals, and they have a very strong pipeline. Also, they've recently acquired some of the logistics for Dadri. I think given that it has a market cap of 7,000 crore, it is the risk reward is very favorable for at least a 50% upside in the next 1.5 years. We have an overweight rating at that. The other play would be Thermax on the back that manufacturing across the country is now picking up. GDP is much better than what was expected, and being the largest makers of boilers, we think industrial activity pickup will see a huge order flow into the second half of 2017. Already the company is guided that on the environment front and some of the export front, they've seen a huge traction in order book. This becomes a very good proxy pay for manufacturing and strengthen the economy in the second half. We have a 25% upside on this of 1,000 rupee target by the end of 2017.
Okay, gentlemen, thanks very much for taking out the time to speak with us. Appreciate your views and your insights. We'll wrap up this show, by giving our viewers a slice of what Chris Wood feels about India among emerging markets and what's his approach towards investment in the region. Hear him out. We'll catch you with the markets tomorrow morning at 8 a.m.
No, well, the valuations, basically, my long-only Asia ex-Japan portfolio has about 25 stocks. I'm more than 50% in Indian domestic demand names in that portfolio. Frankly, I own the sort of stocks that were hit most directly by demonetization, but the good news for my portfolio is these stocks have rebounded strongly in recent weeks, months since demonetization. Tactically, there's probably a case to take some profits in some of these domestic names because they've had good runs, but as it's a long-term portfolio, I'm not going to do big profit taking because I still think India is the best domestic demand long-term story. So I'm continuing to focus in areas like financial areas. I'm hoping and expecting that demonetization will be a positive for the long-term promotion of use of financial assets in India. And I'm taking the view that demonetization initiative is a positive, not a negative.